Hey, Friday, July 12th, market analysis, Stan Ehrlich. We had some very substantial reversals yesterday in stock indexes, and I always start out with stock indexes. I'm going to go to futures. So here's the E-mini daily data. The red bar from yesterday indicates a bearish engulfing in overbought conditions. The overbought conditions are my custom relative strength index, RSI. I learned RSI directly from Wells Wilder in the late 70s, 80s, probably early 90s as well. And it's a variation on his original numbers. We have a sell signal. There's no violations. We've got a rally today, which is no surprise. A little more in the E-mini than I would have liked, but I am expecting it to turn down right away. Comment. We all know the Republican convention starting on Monday. I'm guessing that that's going to cause some market movement, but you never know. The 1 minute chart looks like this. Yesterday, we had that PPI come out. It was expected to be up 0.1, give or take. Instead, it was down, which was the first time, I believe, in many, many months. An indication that maybe inflation is under control and the Fed could start lowering rates. When? I don't know. September came up. So this rally is not out of the question. I don't mind it. We are looking for the market. I'm looking for the market to turn down right in this exact ballpark, as a matter of fact. Next, the spider. Same thing. Bearish engulfing ER sell signal yesterday, as you would expect. But now keep in mind that the spider trades from 6:30 California time to 1 o'clock. And that's a small number of hours relative to 23 hours for the E-mini. So the highs and lows for the E-mini are going to be higher and lower frequently than the spider high and low. So they do come up with different signals depending upon where the rally or the break, what time of day or night that happens. Next, the spider 1 minute opened relatively firm, up a little, rallied, and is flattened out. Next, Qs. We just barely missed a bearish engulfing whopper on the QQQ because of the trading hours, 6:30 to 1. The NASDAQ NQ, you'll see that in a moment, has a whopper. So of a trade and profit, scalp profit yesterday. So I'm sorry to say that it didn't have a higher high yesterday than the previous Wednesday. And that would have generated a big red bar, but the NQ did. Here's the 1 minute for the QQQ. Now, the NASDAQ NQ futures contract did have a rally before 6:30 a.m. California time yesterday, therefore did make a new historic high, and by the end of the day wiped out the low of Wednesday and Tuesday and Monday and darn near the low of the previous week, Friday and Thursday. Not quite. Right smack dab at those prices. I'm not going to pull up the exact numbers. They're so close it doesn't matter. Today, the bounce is fine. No problem. I like the way this is looking and acting. I would consider going short somewhere, somehow. Use your technique. I have to use my strategy, ERSignals, of course. I need a little bit more of a rally to get short for ER3 today. ER1 scalp yesterday did great. As you generated the signal, which was approximately 7:19 yesterday morning, California time, it got short at about, well, exactly 2686.00. Explanation point. 1 means ER1, The capital S means short, small s means scalp, and the E is an entry. So the one short scalp exit for X was right there at 11:57, almost 12 o'clock. And the green line represents the trade. So shorted it, got out, shorted it at 26.86, got out at 24.62.75 with this kicker. And that's that. So no problems at the moment. Like what I see. By the way, some of you might have noticed this sharp little break at 5:30 a.m. California time. It is legitimate, although it looks like bad data. And I can say that because it's on all three of the futures contract charts for indexes. If it's bad data, it probably would have been on one particular symbol. But I see it on all three, so that's not going to happen. It's good data. Next, YM, Dow Futures. The dominant formation is still the broad double top. We got a sell signal on the first high. We got a sell signal on the second high to the exact day. We got a buy signal on the exact bottom. Can't do better than that. Bang, 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 3 in a row. This sell signal didn't work. We took a small loss. And now I'm waiting for more signals, hopefully. And I can eliminate a couple little lines here because they were just cosmetic. Good. Now, obviously, we're high and last, or very close to it. And the double top is in jeopardy if we get up to and make new highs. Since triple tops are very rare, I think it's about to top out now, here, quickly. And that is related to the fact that I'm expecting the Spider, the E-mini, and the NASDAQ to do the same thing. Next is the YM 1 minute. Almost high and last. No change in comments. The Russell, very, very interesting. The Russell is right smack dab at the highest high since April of 22. So 2 years plus. We're testing the highest high for the Russell. Yesterday, extremely strong, big up day. And today, we're getting a bit more follow through. And it stopped at the rally high almost exactly. I didn't want to do that. That's a mistake. Let me make sure I've got things in the right position here. I just switched something by accident. What did I want? I wanted the data to slide. That's right. And I'm looking at high grade. I don't want that. Sorry about that. Russell daily boink. That's what I wanted. The high of the wick is right there. And the high made on April 1st of 24 this year is right there. They look like they could be super close to the same exact price. So no surprise, we're stopping for the moment at a very important historical level. The Russell 1 minute rally high has pulled back a little. The reason why the background is so red is because of this major resistance level that the Russell has gotten back up into again. And look at the RSI at 84. Remember, 90 in particular is one of my barriers, so to speak. 84 is pretty high. So I'm looking for the market to turn down very, very soon here. Bonds. Inside, doji, 1 tick lower, up against previous highs, a little resistance. I am looking for a minor correction down in interest rate futures, but I think these lows are going to hold. The low we had in October last fall, bullish engulfing ER buy signal on the exact bottom of the market, even to this day. And this low here on April 25th. We may be able to dip down to about 116, but I'm thinking it probably won't even come down quite that far. And I am definitely looking for new highs for the trend here for the last couple, 3-4 months very soon, maybe in a week or two, maybe even sooner. I'm bullish to neutral, but basically bullish on interest rate futures. 10-year notes made a new high since April 1st, yesterday. Pulling back a little, getting close to overbought, but not quite. What about bonds? Getting close, but not quite to overbought. And now we're going to go to crude oil, heat unleaded. Crude bounced off of the support area pretty darn nicely. Let's send this to the background if I can. Okay, it's there already. That's the bottom of the wick right there in the yellow zone and closed way above it. Rallied a little more yesterday. And so far today, again, don't have any signals lately. We had a bearish engulfing back here. That didn't work. We had a bullish engulfing that worked okay, not great, over there. But not too many signals lately in crude oil. That's too bad. Not responding to the system very well. Sell signal right here in natural gas. Did great for a couple of days. We're now back to the resistance on the way back up at the moment. And because we're oversold, natural gas could have a bullish engulfing if today's high was above 2.343. So today's high so far is 2.338. We need to get above 2.343. 3/8's the high. Very, very close to the high, and we need to be above it by 1 tick. And I'll have a green bullish engulfing around the bottom of the support area, oversold condition, and a buy signal in natural gas. And we're not very far from the high of the day. This could easily create a buy signal today. Heating oil. We have an outside down day today, bearish engulfing. 1, 2, 3, 4. That's good. I don't like them after the markets drop quite so much, but the rules are the rules. And we do have the bearish engulfing. We were overbought within the past number of days allotted. And I have to still be bearish. This bearish engulfing on July 5th, Friday, last week, a week ago, was great. 1 day down, 2 day down, 3 day down, yesterday up just a little. And now we're holding slightly higher, but outside down day we have had, and I think it's going to be a good sell signal. Next, gold. Doji climbing. I don't know. This chart looks a little bit like the Dow Jones double top, sideways stuff. We're almost overbought, very close. I think it's going to turn back down a little bit for a minor downside correction, but mostly I'm waiting for either the double top to fail and make new highs and then get bullish and stay bullish again, or the double top to start working and break down below this yellow line, which is just a little bit above 2,300. That would be a downside breakout. And if that happens, then you can measure the downside objective on the double top and come down to a price level, which is probably right around the support area. I don't have any problem with that. Yeah, that's what'll happen. So kind of waiting for the moment on gold. Silver's dipping down a chunk, no particular reversal. Got extremely close to overbought last few days. This could be a head and shoulder top. Now, that is not what I wanted to have happen. Just a moment. And I don't seem to be able to rescale it very quickly and very easily. That's a bummer. Well, I apologize. This chart's getting screwed up because I did something wrong. But the point is, there's a head and shoulder top in silver. I've talked about it for almost every day. And we're still right around the last shoulder high if it starts to work and head south. Oh, here we go. Nope, that didn't seem to work right. Let me see. Nah, I'll get it later. Copper. Platinum, sorry about that, platinum, does have a head and shoulder top, is moving down a little away from the rally, last rally high, shoulder high, does have a neckline I've drawn in for you already. Let me make minor adjustments to this line. I need to raise it just a squeak. There we go, that's better. You're supposed to touch these lows, and that one looks good right there, perfect. So the minimum downside objective, if this pattern works correctly, would be all the way down to 804. All we need to do is break below the neckline. Last shoulder's been made, starting to drop a little. Last couple of days up slightly, resistance above the market. So far, so good. I see no problem. Plus, of course, we got an ER sell signal on the exact high day. Copper. Not too much to say. I got a sell signal July 10th. It didn't pan out by the end of the day. Remember, these triggers, signals, can develop and do develop during the day. Most of the time, they stay legitimate on the close. But sometimes the market starts moving in the opposite direction and the close violates the rules and the signal is negated. So that's what happened on Wednesday this week with copper. Still looking for this market to go sideways to lower and test support again. Now, beans, oil, meal, corn, wheat, cattle, and hogs. Beans have done it again. They've made another new low. Those of you who don't see my program all the time, I want to remind you that these are new lows in soybeans during this whole week, ever since January of 22, 2.5 years. Very bearish. As I said before, it broke out below the support. Very bearish. I think it's gone down every single day since that downside breakout. Just a second. Yeah, okay. Now we're oversold. You can see it's trying to slow down a little. The rally should be back up to approximately 11, and I'm not ruling out 1140. Next. Oil rallied bean oil rallied substantially, got overbought substantially, started to pull back this week and bouncing around for a couple of days yesterday and today and even Wednesday, getting back to neutral RSI. I think it's going to come down and test support and do what soybeans have done. Break out to the downside, have a very big move down, still basically looking for this huge, too big, head and shoulder bottom I've been talking about off and on for a couple of months now to probably fail. There's a few reasons. You've heard them before. Meal. Broke out to the downside on a short-term basis Wednesday. Yesterday was nothing. Today we made another new low. And basically we're staying down. The minimum downside objective off of the small double top is 326. The second high on the double top was a bearish engulfing ER sell signal. Perfect. It's just working exactly the way it should. We got a buy signal on the bottom of this market to the exact day, February 29th. Also, next, corn. Doing the same thing that beans are doing, except leading the way. Oh, hey, today we got a bullish engulfing. So I just noticed it. I think it just happened. Yeah, it looks like it just happened a few minutes ago or something. So this is a short-term low, probably. It needs to close higher on the day, above by one tick or more, yesterday's close. Then we'll have on the close a legitimate bullish engulfing on corn. No surprise, it's been oversold for a couple of weeks. The rally is going to probably be back up to the previous lows in the ballpark of 426. And like the same kind of formation on the other chart, I can't rule out a test of a little higher, better resistance. And in this case, for corn, 441. So yeah, 20, 40 cent rally isn't bad. And it's exactly what I'm expecting. And today is exactly the low day, I think. Bullish engulfing ER sell signal today, first time in a while. Last time it happened was on February 26th, and we've got the bottom of the market to the exact day. Next, we got the bottom of the market to the exact day, again, March 8th for wheat. And wheat is making a new low for the first time. I'm bearish on grains in general, except corn for the moment now. Corn is different because it's got a brand new signal today. But everything else pretty much doesn't and should drop off a little more. New lows for wheat for a long time. Ever since the top of the market at the beginning of the war. And that was March 8th, 22, it looks like. Bearish engulfing ER sell signal on the extreme radical rally. We have a sell signal on the top. You're not going to see that very often. Once in a decade or two, literally. That reminds me of the Russian grain deal type of price action we had in 72, 73. I started in 71, this industry. Next chart, cattle. Resistance area stopped it. Overbought conditions stopped it. Had a sharp big break on Tuesday. And it's been going a little bit sideways. Wednesday, Thursday, and today, up a little bit, not much. I still think we're going to head down, close this old gap that's between June 13th and 14th. And that would mean coming down to 180. If it holds at 180 and turns back up, then I can maintain my bullish expectations in general. Right now, it's a little bit ambiguous as to which is going to happen. So you go with the trend as your friend. And since December, therefore, all of this year, the lows have been higher, the highs have been higher, and the trend is up. So this support level I tested early this week, whether we close the gap or not, I'm looking for higher levels in cattle. Hogs. 2 buy signals on 2 short-term minor bottoms worked nicely, not fantastic, but very nice. That sell signal on the top of the market, April 10th, was fantastic and turned out to be the head of a head and shoulder top, which also worked perfectly. So we have a new low for the trend on Wednesday, a little follow through the downside yesterday, Thursday, but the close was strong. And we now have a little bit more rally up to resistance today. I also want to point out that yesterday we got oversold just barely, so it's no surprise. Oversold, turn the price action yellow. Then we have a little rally today, up to resistance. Trend is down. I think we're going to see new lows for the trend very soon, and probably it's going to top out either where it is now or maybe a little higher in this yellow resistance area. And we're going to check the E-mini again before we go. Looks like it challenged the highs and actually made new highs slightly in the last few minutes. I have no problem with that so far. I don't think we have a problem. The Qs haven't even made, the NQ, NASDAQ futures, hasn't even made a new high. Remember, I believe the NASDAQ is going to be leading the way up and down on these moves lately, as it has done off and on, mostly on, for many months now. I'm going to say maybe the last year or two. Could be even longer. You have a profitable day and profitable trading to you. See you on Monday.